Welcome back to the series of videos that explains how to use the financial statement and analysis spreadsheet system. This spreadsheet is part of the University of Wisconsin Division of Extension's Pulse program. And the Pulse program, as well as the spreadsheets themselves, can be found on the website shown on the visual. There's also a third website there at the bottom of this visual that takes you to another part of the website spreadsheet system as well. Other websites that are going to be used as part of this video include the link to the Farm Financial Standards Council, which is a council of different kinds of accounting, farm accounting experts and so forth that have vetted out a lot of the analysis metrics that we'll be talking about today. The final website that's referenced there is the University of Minnesota's Center for Farm Financial Management's FinBin database system. This is an online database that is sortable that sometimes is very useful for finding peer comparisons. It's not the only place, but it's a place that's easily accessible to search for peer groups that might be like yours. My name is Kevin Bernhardt, and I'm both a farm management specialist for the University of Wisconsin Division of Extension and also a professor at the School of Agriculture at the University of Wisconsin in Platteville. If you've been watching these videos, then you now have an accurately completed beginning balance sheet, ending balance sheet, and an accrual adjusted income statement. That is a great accomplishment. And probably just as a part of all the detail work in putting those statements together, you perhaps may have gotten some insights about management decisions to make for your farm to make improvements in the future. But this video is taking that a step further. The real prize is analyzing those financial statements and really discovering the financial story that's being told. Better yet is to find out where there might be some places for improvement so that we can act on that tomorrow morning after breakfast. This video discusses a three-part process for analyzing financial ratios. The next video will take a look at some other kinds of metrics that would be very useful, including cost of production, sensitivity analysis, and the DuPont system for financial analysis. But for now, let's talk about the three-part system for ratio analysis, and let's get started. There are multiple tools and methods for analyzing financial statements. Some are very involved and take lots of time. Others don't take much time, but you also lose a lot of information pieces as well. However, all of them have value. This video is going to share with you a three-part system, a three-part process for analyzing financial ratios that I have often found useful. Certainly not the only way to do it, but it's a way that might be useful for you. It's also one that is programmed into the spreadsheet system, as you will see shortly. While there is some data entry that's involved, most of the math is being done for you in this process if you have completed all the financial statements ahead of time in the spreadsheet system. The three-part process is, the first part of that process is comparison of your financial ratios for your farm to a set of industry standards that are recorded. Primarily the ones we use are ones that are on the farm finance scorecard. And the scorecard is something that has been used for a long time. We'll talk more about that later. And there's a link on the visual that goes to that scorecard. The second part of the three-part process is a trend comparison of looking at your financial ratios compared against yourself over time. So what direction are you going over the last 3 years or 5 years or whatever number of years you have available to you? And the third part of the process is a comparison of your financial ratios to a peer group. So the average of your peer group, better yet, what's the top third or the top 25% of your peer group that you can compare to. So we want to look at each one of those three parts of that process, gives us a little bit of a different piece of information, and collectively together, they give us a full story of what's going on in the farm operation. Okay, you see in front of you a spreadsheet, that spreadsheet system full of a lot of numbers there. So we'll work our way through those. This is a tab at the bottom that's called ratio analysis. So we want to, we've worked with the income statement schedules tab. We've worked with the income statement tab, etc. This is the ratio analysis tab. Let's start by looking at part one of our three-part process. And that's using the ratio scorecard. You can see the scorecard over here to the left to measure against industry standards. Now the scorecard is in columns A through F here, and then our information starts, and it starts, looks like we have the most current year was 2015 for this case study. Our information starts in column G, but let's look at the scorecard itself. The scorecard is valuable because it has lots of different attributes to it that are useful for us in analyzing our farm. The first one is that it covers 5 different areas of the financial picture. And those are in the bold or way over here to the left on the visual. Those include liquidity, solvency, I'm circling it here on the spreadsheet, profitability, repayment capacity, and financial efficiency. Together, those 5 areas tell a fairly robust story for the farm. And as you can see, there's a few ratios, a few metrics within each one of those areas to help kind of build that story. The other thing that's valuable about the ratio scorecard is there's predetermined metrics of what the scale of how to read your ratio. And that scale follows the stoplight idea. So red is a weakness, that's a vulnerability if you find your ratio in that area. Yellow is a watch area or a cautionary area. And if you have, if your ratio is in the green, that means that's an area of strength. Now, I want to make note that don't be surprised if when you look at your situation, you have some yellows and you have some reds. You maybe have several yellows or several reds. That's not uncommon. You don't want to continue a long time with a lot of reds, but for any given year, especially, that's not unusual. So don't be frightened if you should see that situation. But anyway, so we have the 5 areas. We have a scale that we can measure it by. The other thing that's valuable about the ratio scorecard is that it is vetted by the Farm Financial Standards Council. And earlier in the video, we had a website that went to the council's website. They have a guideline for farm records and farm analysis. And these ratios have been vetted by that group of folks at the Farm Financial Standards Council. Finally, it's been used for a long time. So the ratio scorecard has been around for most of my career, I think, and it's been well used and well recognized. In addition, in the spreadsheet, there is additional measures and ratios that are below the ratio scorecard that also follow that kind of the stoplight measuring ability. So in the case of the spreadsheet system, once you have the balance sheet completed, once you have the adjusted accrual income statement completed, then the numbers are automatically calculated. So in column G, you can see this is the most current year. This is the year we've completed the balance sheet and income statement for, and all the numbers are already there. So we have the ratios already calculated for us in that case. Now, interpretation of these ratios is beyond the scope of our video here. It would take too long to do that. But the websites that were referred to earlier have some excellent discussions about how to interpret and how to calculate these ratios. In the case of the spreadsheet, of course, they're already calculated for you for the current year. Now, for the other years, 2014, 2013, those you would have to enter from having done those in previous years. So you'd have to dig up your records and enter what your ratios were for those previous years in order to get this 3-year average that's available on this spreadsheet. Finally, the peer group also has to be added into this particular spreadsheet. And that one is, where do you find your peer group average? You might be able to find it through your consultant. You might be able to find a peer average, a peer group through your lender, for example. Also, the University of Minnesota Center for Farm Financial Management's FinBin database is accessible to anyone who has an internet connection, and that can be you can find a sort there that might be a good peer group comparison for you as well. And other farm management associations and so forth, depending on what state you might be in, will have peer comparisons for you as well. So you can look at an average, and what I often like to do is look at something better than average as well, top 20%, top 25%, whatever is available to you, because I don't want to be just average. I want to try to shoot to be towards the top of the pack if I can. So I want to know what those numbers are. So there's our three-part process. Here's our current year, 2015. We can compare that year to industry standards. We can compare that to ourselves over time, in this case, a 3-year trend. And we can compare that to two different peer groups, an average peer group and a top 20% peer group, both for this year as well as the 3-year average. That is a lot of process there, and it tells a lot of story. Now, why do we have the 3 parts? Well, the first part with the ratio scorecard allows us to really look at how we compare to what the industry tells us ought to be a good measure for these different ratios. So that gets us in the ballpark, so to speak, of where we should be. The trend analysis, however, I had a mentor tell me once that it's not how close to the devil you're standing, it's which direction you're going. So that's what the trend analysis tells us. We may be in the red when we compare ourselves to industry standards, but if we're improving, then that's a positive sign. Now, we may want to follow up with some questions. Why are we improving? Is it because of something that we purposely did? Or is it just by luck of what's happening in the economy at the moment? What can we do to continue that improvement? Do we need to do something else in order to continue that improvement? Those would be the kind of questions we'd want to ask. Now, the reason for doing the peer comparison, if we have a good peer comparison group that we can compare to, is that decouples our situation from the current macroeconomic situation in the agriculture world. So, for example, we could have had a bad few years, maybe even up to 3 years that were negative, and that's happened in the past. So for the dairy industry, you could think of 2015, 2016, 2017, for example. If that were our 3 years, it's very possible that when we take our current year and compare it to the ratio scorecard, we're going to have a lot of reds, not because we've done something wrong in management of our farm, but solely because of things that are outside of our control in the agricultural economy at the time. When we look at the 3-year trend, we might actually see our situation getting worse over the course of those 3 years. Now we're really feeling bad. Not only are we in the red compared to the scorecard, but we're getting worse over time. It seems like things are really going negative. But now we compare ourselves to the peer group, and we find out that we're above average. Even though we're in the red, even though things are getting worse, by the trend analysis for those 3 years, we're actually above average, or maybe even in the top 20%. Now, how can that be? Well, if it's something that's happening economy-wide, that's affecting everyone. So everyone is lower, but we are higher compared to everybody else. So even though we're lower, we're doing better than our peers. So when things turn around, hopefully they turn around even better for us. So that's an example of why you want to use all 3 parts of this process to give yourself a full and robust picture of your situation. Of course, I could have told the opposite story too in our situation. Perhaps we've had a couple really good years and we're looking good compared to the scorecard, but when we compare ourselves to our peers, we're actually not doing as good. So that gives us a different picture and different information of what to do tomorrow morning after breakfast to improve our situation. At the completion of this 3-part process, you now have information on how your farm stacks up to industry standards, to yourself over time, and to a peer group comparison. In the next and last video for this series, we will review 3 other analyses, those being cost of production, the DuPont system, and sensitivity analysis. Until then, thank you for listening.